This is INO FOREX. You are watching INO FOREX. Welcome back to the channel. In today's video, I'm going to show you how to identify another block in the Forex market and how to use it to find a high probability trade setup. If you have been struggling to know where the market is likely to reverse or continue, this lesson is for you. Make sure you watch until the end because I will explain step by step how to identify quality order block and how to enter in the trade with more confidence. If you enjoy this kind of Forex content, don't forget to like, subscribe and turn on notification so you will never miss a new trading lesson. So let's get started. I'm going to start by teaching you how to find an order block. What is order block in the market? So let's get it. As I told you, market moving, doing a pullbacks. So when the market moving in uptrend, this is impulsive move and this is corrective move. If market is bullish, market create a pullback and then after market again push to the upside. When market again push to the upside, the order block. When the market again push to the upside, on the lowest point the market create another block. So order block will be a last candlestick. Let me show you an example. So look at this chart. As you see, market push it to the upside and again market create a corrective move and then after market pushed to the upside. So on this pullback, this is the lowest point. So on the lowest point, we're going to find a last candlestick. As you see, this is a last candlestick. When the market create a pullback, a last candlestick will be another block. So that's why this candlestick is order block. So I think now you are understanding the order block, how you can find order block on the chart. So the question is this one: how you can find the order block which has a high probability to push the market? That's what I'm going to share with you. So a high probability order block is the order block which has a fair value gap. So how you can find a fair value gap in the market? Let me show you. So what is a fair value gap? I'm going to show you how you can find another block which has a fair value gap. So first we're going to select our order block. So this is order block. So to see if this order block has a fair value gap, you select a high of this candlestick and the low of the third candlestick. So we're going to select a high of the first candlestick and the low of the third candlestick. So the fair value gap is the space between the high of the first candlestick and the low of the third candlestick. This space called fair value gap. So our order block, as you see, has a fair value gap because there is a space between this candlestick and the third candlestick. So this space is a fair value gap. So for example, if there is no space, for example this candlestick pushed down and fill this space, in this case this order block is already used because as you see, between the high of this order block and the low of the third candlestick, there is no space. So this candlestick hasn't a fair value gap. So when the order block has a fair value gap, we're expecting that market will push to the downside to fill this fair value gap. So if market mitigated this candlestick, we're expecting that the buyer will again push the market to the upside. So again, look at this chart. As you see, when the market create a pullback and then market push to the upside, order block will be a last candlestick. So this order block, so our last candlestick is this candlestick. This is a last candlestick. So after finding the last candlestick, we are going to see if this candlestick has a fair value gap. We are going to select a high of this candlestick and the low of the third candlestick. And as you see, this candlestick hasn't a fair value gap because as you see, the third candlestick already fill the fair value gap. So that's why this candlestick hasn't a fair value gap. In this case, how I will find a fair value gap? So in this case, if this order block hasn't a fair value gap, we take the next candlestick to see if this candlestick has a fair value gap. So the next candlestick is this one. So we're going to select the high of this candlestick and the low of the third candlestick like this. We select the high of this candlestick and the low of this candlestick, and this space will be a fair value gap. So we expect that market will return to fill this fair value gap. So how we will mark our order block? We will mark those two candlesticks. Because our fair value gap starts from here to this point, that's why we will select all those candlesticks. So we expect that market will return to fill this fair value gap. So the way you find the order block and the fair value gap when the market is bullish is the same as when the market is bearish. So here is when the market is bearish. As you see, market is pushing to the downside. So to find order block, we will wait the market to create a pullback. As you see here, market create a pullback and again push to the downside. So order block will be the last candlestick. As you see, as we did when the market was bullish, this is our last candlestick. The next thing we are going to do, we are going to see if this order block has a fair value gap. To find a fair value gap, when the market is bearish, we mark a low of our order block and the high of the third candlestick. Like this. This is a low of the first candlestick and the high of the third candlestick. After selecting high and low, this space will be a fair value gap. This is a fair value gap. This is our fair value gap. That's why we're expecting that market will again push to the upside to fill this fair value gap, and then after mitigating this order block, we're expecting the seller to push the market to the downside. So what if this candlestick mitigate this order block like this? As you see, this candlestick already fill our fair value gap. In this case, we don't have a fair value gap. So in this case, this order block already used. When order block is already used, we can't use it again. Here, this order block hasn't a fair value gap in this case. So let's go to the next chart. As you see, our market is bearish. Here, market pushed to the downside, create a pullback, and then pushed to the downside. So our order block will be a last candlestick. This is order block. So the next thing we are going to do, we are going to see if our order block has a fair value gap. To find a fair value gap, we mark a high of this order block and the low of the third candlestick. As you see, when you select the low and the high, you can't find a fair value gap. So in this case, when you miss a fair value gap, you go to the next candlestick to see if it has a fair value gap. The next candlestick is this one. So we're going to select a low of this candlestick and the high of the third candlestick. So this is a low of the first candlestick and the high of the third candlestick. As you see, we find our fair value gap. This space will be our fair value gap. That's why to select the order block, we will select those three candlesticks because our fair value gap will begin from here. So we are expecting that market will push to the upside to fill this fair value gap. So I hope you have seen how to find a fair value gap, and order block is very simple. So we're going to jump to the live chart and show you how you can find order block and the fair value gap on the live chart. So now we are on the real chart. So I'm going to show you how you can identify order block which has a fair value gap. I'm going to show everything you will understand. As I told you, we find an order block after a pullback. As you see here, market create a pullback. Order block is the last candlestick. So let me show you. As you see, here market push it down and they create a pullback. Again, market pushed to the downside and again market pushed to the upside. So in this case, as you see, market created this form. As you see, our order block will be on this point. On this pullback, this is our last candlestick. So our order block is this candlestick. So how we can find if this order block has a fair value gap? We are going to mark a high of this candlestick and the low of the third candlestick, this one. So we select our low and the high of this candlestick. You see this space? So this one is our fair value gap. This is our fair value gap. And as you see, market pushed to the upside and create a pullback to fill this fair value gap. But as you see, market didn't fill all fair value gap. It returned from here. That's why when we are going to mark our fair value gap, we will mark a high of the order block to the point where the market is reached when it comes to fill this order block. So that's why our fair value gap is from the high of this candlestick to this point where the market is reached when it comes to mitigate to fill this fair value gap. So our remaining fair value gap is this one. So as you see, that's why the market create a pullback. As you see, it create a pullback to fill all this fair value gap and mitigate this order block, and again the buyer pushed the market to the upside. In this case, that's how we can find a fair value gap. So this is our first order block, but as you see, this order block is already mitigated. But as you see, this order block is mitigated by this pullback. Again, market pushed to the upside, create a pullback, again pushed to the upside. Look at this pullback. Our last candlestick is this one. This is the last candlestick. So as you see, in this case, look at this candlestick. We're going to see if this candlestick has a fair value gap. We're going to mark a high of this candlestick and the low of the third candlestick. But as you see, we don't have a fair value gap because there is no space between this candlestick and the third candlestick. So that's why in this case, this is our last candlestick. When we miss a fair value gap, we select the next candlestick. So in this case, we select the next candlestick. Then the next candlestick is this one. So we're going to see if this candlestick has a fair value gap. We're going to select a high of this candlestick, the next candlestick, and the low of the third candlestick from this candlestick. The third candlestick is this one. This is select from the high of this candlestick to the low of the third candlestick. So as you see, this candlestick has a fair value gap. This space will be our fair value gap. So when you're going to select another block, we will select as we did on the diagram. We will select all those two candlesticks. All those two candlesticks will be our order block. So that's why, as you see, the market pushed to the downside to fill this fair value gap and mitigate this order block, and again market pushed it to the upside. So I think you have seen how order block pushed the market, how we can identify the valid order block which has a fair value gap. So I invite you to watch the next video. The next video, I'm going to show you how you can take a trade using order block. So don't miss the next video. Is a part 2 of this video. I will show you how you can take the trade by using order block. So make sure you have subscribed to this channel so that you will never miss the next videos. So see you to the next video.